Today, I'm up over $90,000 day trading live, and here is the exact trade that helped me make over $90,000. But before we get into this trade, I was actually red yesterday, and yesterday I lost over $61,000 day trading. Well, how the hell did I come in today unfazed? How did I continue to follow my system? How did I not, psychologically have a lapse and, continue on forwards with my system? Well, we'll get into it. Before we get into today and how I made $90,000 precisely, let's get into yesterday and how I lost $61,000. So, coming into yesterday, simply put, I had a long bias with sentiment via higher time frame and how price was looking. It was very easy for me to believe that price is going to draw higher coming into yesterday's open. But the thing with yesterday specifically is I didn't have a direct bias outlook in terms of a mechanical sense. I simply was going off what trend was doing in the market, which you could see on the hourly time frame, the 4 hour, or the daily were clearly bullish by engulfing consistently and seeing large directional movement towards the upside. I leaned on that. Now, the thing with yesterday, specifically right off the bat, immediately after I shut off my live with the red data I had, one of the first thing was the bias outlook I could have had that was a bit better, right? So if you're looking at price here specifically, although we were very bullish, I don't think it was the wrong thing to be bullish here, or specifically with bias. It's a lot more so with timing on my red days. For example, for yesterday specifically, coming into the open with that bullish sentiment through higher time frame and just naturally leading on that, although we didn't have a pure mechanical look on exactly why we're bullish. You guys have to remember, including myself, and yesterday was a good reminder, that timing is very important for us scalpers. You could have the right bias, but if your timing's not there, you will still get stopped out. We could be trading at literal all-time highs and you can still get stopped out on longs if we don't have the right timing for your trades. And so for me specifically yesterday coming into the open, although bright price was clearly bullish, what I wanted to more so do and should have done was been a bit more patient. We had a bullish look higher time frame. Again, no mechanical look, no perfect low being put in place. We see price overnight not really do much, more so in a state of consolidation. And coming into the New York Open, we have our bullish opening range move, which where we see price come up here, take out overnight highs, and you theoretically see price still hold above the highs and showcase interest in driving higher. From there, what we ended up looking for trade number one, which was trade number 1 out of 2, was we looked for a 1 minute inversion fair value gap rebalance. Now, here's the thing. Although this trade took an L, although we lost money yesterday, this first trade here was easily voidable in terms of taking a loss. What I mean by that specifically is had we taken the initial inversion entry, we most likely would have been in a lot better of a position. Now, what we end up doing here through yesterday is we end up taking the retest. So we initially invert the gap, which would have been your initial confirmation right here. And then you see price essentially come back up. Then we end up seeing price come back down, rebalance, tap the CE, the midpoint of the 1 minute bullish inversion fair value gap. And you see price come back up here, which we eventually take confirmation at this 1 minute closure at 9:57 a.m. Eastern Standard Time. Now, the confirmation part is not the most worrisome thing, although it could have been better. It was more so me not being more so risk on or me being proactive a lot sooner in the market. Today we were. Today we were very patient but still very alert. Yesterday we were not. We took a retest inversion for value gap, which we often rarely ever do, right? We always typically take the inversion creation, that confirmation right here, through our entry models versus the retest. So that was kind of the first indication that, okay, yeah, I'm a bit off today, but more so specifically with confirmation going back to that, this was not the best confirmation to work off. I will say trade number 2 had even worse confirmation, but with this trade here, this confirmation, it wasn't the worst in the world, but what you want to see ideally, as we always talk about when it comes to confirmation on trades, is you want to see price rebalance and you want to see price engulf past. We do see a good candle, but this is not an engulfing sequence where you see price come down deeply and then you see price showcase a really good instance. We have that instance more so a couple days ago, or constantly, but not with yesterday's first trade. We end up having our stop placement based off this 1 minute wick low. It's a model, or excuse me, 1 minute fair value gap low. It's a model stop loss, right? And we end up seeing price essentially come back up. We initially go in the money right after entry, but ultimately come back down and we see price draw down lower. Now, Lento, what could you have done better here? What is something you could have worked on that could have improved you avoiding this entry, or potentially, waiting later on for a potential entry moving forward, or even just avoiding it entirely? Well, for me specifically, although we had a higher time frame look, what I needed to do yesterday was have a complete mechanical look. Like I said earlier on, you can have a bullish bias, which I still think wasn't the worst thing that I have here. But if you have no typical or systematical or mechanical look from your higher time frame, aside from the fact that we're seeing price trend in one direction, there's not really going to be a precise timing aspect to your trading. So again, on the hourly time frame, it's not like we created a significant move or we saw a large imbalance or we saw something significance or of significance. We see price essentially just trade up, and all we're looking to do is simply ride that trend further on. That was more so me blindly sticking to a bias due to the trend in the market. With our second trade in the market, it was a trade in which we ended up taking on ES. If you go to ES here and you see ES, this trade entry was a bit after our first entry on NQ. So we took this trade entry on NQ at around 9:57, got stopped out a couple minutes later at 10:02. Our second trade on ES here was taking at around 10:15, so about 7 minutes or so after trade entry on the first take, or after stop out on the first trade. We end up seeing price offer something for us theoretically, and we end up taking a second trade. Now, this trade here, I'm very upset about. This is the only trade this week where I'm truthfully disappointed. We've only had, I think, 2 losses this week, Chad, if I'm right. The first trade yesterday and the second trade yesterday. The first trade I'm not going to be too upset about because it's not the worst thing in the world. We could have just been a bit better with our timing through, again, our higher time frame look. And if we had like a feasible actual entry criteria and components to a system, we could have taken that. This right here specifically pissed me off looking back at it afterwards because we were very choppy here coming into this trade. And not only that, I take a very bad entry model off this trade. What I end up doing is instead of looking for a proper entry in the market, I simply look at this 1 minute gap here, which was a bullish fair value gap, which then got turned into a bearish inversion fair value gap, which we then came back up and violated after. Now, I will say this. The gap's not the worst here in terms of taking because we had this instance before and we've seen it work out really well where we've seen a bullish gap come down here, close under, violate it, and then still come back up and take entry. More so, what upset me here was the price action sequence and the confirmation sequence on this trade. We had stop loss based off the relative low. We wanted to go break even off the highs and then target a psychological level in 20 or 7.830 on ES. The thing that I'm upset about here going again is the fact that price was very choppy coming into the open. As you guys know, price action and confirmation, specifically confirmation itself, is the timing aspect of our trade, right? As we talked about with the first trade, our timing was off through our bias. With this trade, our timing was off the easiest thing, confirmation. Price did not confirm here well. We see price steadily over and over again stutter inside the gap, where we eventually see a couple closures over the gap, but you never see an enticing engulfing sequence, right? A proper engulfing sequence off an entry, you go back a couple days ago or go back to the last recap, and you can literally see what good confirmation is. You want to see price tap a gap off a rebalance, or in the case that we invert, you want to see price come up, invert with an engulfing sequence. You want to see price be consistent on the move up. This was not consistent. This was up, down, up, down, up, down. When in the history of the stock market have you ever seen price go to draw when you've seen price trade up, down, up, down, up, down in this instance? The reason we use confirmation is for timing. And when confirmation's clear, timing's clear. Confirmation was not clear, therefore not making this timing clear. We eventually end up getting stopped out. This is more so a pattern trade than it is anything else, truthfully. The first trade wasn't too bad. This trade right here was very bad. This is a rookie mistake from my end, truthfully. And this is a rookie take, right? Because all we essentially ended up seeing here was, oh, we got stopped out first trade. Our long bias is still there. Oh, 1 minute gap here. We see price come back up. Let's take the trade. Instead, of recently, previous recaps, and for today specifically, we had clear draw and clear bias. Let's move on to today, and let's talk about why today was successful as opposed to yesterday. Well, coming into today, first things first, our bias. The reason today was so successful coming into our day was because of our higher time frame bias. As referenced earlier, what we talked about with our day yesterday was that we had no definitive low or high or extensive move put in place, higher time frame, to allow us to be bullish and allow us to be bullish now. So with today coming into the open, what we end up seeing price do coming into the New York Open was we ended up seeing price fulfill an hourly gap. We had an hourly gap fill here at 29,238, and our low was put in ticks away from that 29,238 hourly gap fill. We see a beautiful rebalance on the hourly time frame paired up with the 4-hour time frame rebalancing on here, and on top of that, you have a clear displacive move off the low into our opening range move. So we see a really good low being put in place through the hourly gap fill and the 4-hour gap tap. And not only that, as we talk about with our 2 components and reversals in the market, you see price put in a low, but then you also see price displace clearly. What do we lack of yesterday coming into the open with our bias is that displacement. You see price open up through New York here on ES, and what do you see price do? This is your 9:30 open. We do nothing but trade in range, right? Not that 9:30 open. Ever since that, we did not end up seeing price come back down or up past this range until after 10:38, 10:37 a.m. Eastern Standard Time. So about an hour and 7 minutes or so after our open, we eventually see our first move. Well, with today, we end up seeing our first move right off the open. We see price come up here, and we see price end up putting in a low and displacing all the way back up, seeking a move higher in the market. Now, initially coming into the market, I had a short bias. I wanted to see price trade lower. But after seeing the displacement that we got off the open and the low that we put in, it was very clear to have your bullish sentiment put in place. Idea, potential long in play. Break even off London highs, target Asia highs. 1 minute FEG rebalance, combining two similar gaps into one. So as we talked about, three components: bias, price action, and entry model. You could see with today's bias clearly off the higher time frame look and your opening range move paired up with price action be very displacive and very directional. We had a clear look. So not only did we have a clear look in bias in terms of being bullish here, but we had a clear look in price action, which helped a lot more with timing, right? You could see that happen today. We ended up seeing price come up, and with our entry model here specifically, after getting our two components lining up the third, first component being bias, second component being price action, and after those two components were A+, we simply looked for a good entry model in continuation here, riding higher. Again, hourly low put in place based off the fact that we saw an hourly gap fulfilled, a 4-hour gap tapped into. We see beautiful displacement right back up, and all we simply look to do now is ride a continuation take after the reversal already happened into set draw targets. Another thing that we lacked yesterday, unlike lacking today, is yesterday we lacked clear draw targets. Specifically with the ES take, we ended up seeing a trade entry where we had to use simply purely off psychological levels, no definitive inefficiencies in the market, unlike NQ here for today, where we see a clear London high and a clear Asia high. So what we do today is we take this trade before liquidity was ran, and we take a beautiful optimal entry where we combine two 1 minute gaps. That's why I combine two 1 minute gaps. Well, I wanted to create a bigger displacive area of interest where we could see price draw into. This 1 minute gap here was too small for my liking. This 1 minute gap was too small for my liking. So I combined the both, and I looked for a potential entry model there. I kept the stop placement, unlike yesterday being the model stop. I kept today's stop placement off the 1 minute wick low, had our take profit interest in these Asia high, and our break even zone once we saw a closure above London highs. We eventually take our long here, and I say I'm long at 9:59 a.m. Eastern Standard Time. We eventually go break even once we saw price initially consolidate off entry. Then we see price eventually come back up here, and after a bit of consolidation, we see price eventually go. Lento, why the fuck did we chop so much today? Lento, I took your trade today on the live, but why did we chop so much? Why did we almost get stopped out? What here was the main thing? The SMT divergence. I made a short about this earlier today as well, but the SMT divergence today that we had in the market is what's caused this consolidation in this trade. We went from, taking this trade to a bit of drawdown to seeing price points away from TP to coming back down here and seeing price points away from break even to eventually coming back up here and taking out highs. Well, here's a great way to tell. You guys know SMT divergence is a big factor when it comes to my trading, and this is a set piece to this edge right here. Lento, how are you able to tell? Well, if you look at slightly after our entry, what we end up doing here, the way you're able to tell, two main ways. You tell through price and in terms of how price delivers through just the engulfing sequences that we have, or you tell based off highs and lows. Well, if you compare ES and NQ's London high together, what you could tell is that we end up seeing NQ come up here, and we end up seeing NQ take out its London high at 10:07 a.m. Eastern Standard Time. Remember that real quick, because if you look at ES and you look at when ES took out its London high, ES does not end up taking out its London high all the way until 10:11 a.m. Eastern Standard Time. So what does that tell you? NQ ended up taking out its London high 4 minutes before ES ended up taking out its high. So what does that tell you? That tells you that NQ is the indice which wants to trade higher sooner than the other indice, which tells you this indice is leading. So we end up doing that, or while we end up holding this trade, we have a good realization of that, and we also have more conviction in this trade panning out. But the reason you see this trade consolidate so much prior to take profit more so is because NQ was trying to push and push and push, but ES clearly, once we took out that high at London high, you could see that although NQ was pushing up, ES was coming back down. So this instance right here at 1019 to 1028, if you pair that up with NQ, you can see that from 1019 to 1028, we saw price come down, and we saw price come down at a discount or a smaller rate compared to ES because NQ was still leading through identification. ES, though, was looking for a reversal, and we don't end up seeing take profit get hit until ES showcases a relief in the market. So you can see the sequence right here that ended up happening at 10:53 all the way until 11:10, about 20 minutes or so until our take profit gets hit. You can see in the same stretch, price on ES wasn't even moving towards the upside at all. All we saw was a bit of consolidation and a bit of a relief back up, and this simple move right here, right, is what caused NQ to come up and take profit. Being that we had recognized how bullish NQ was relative ES, we knew we were in good hands, but we knew there was a risk factor in us getting stopped out break even in the case that ES wanted to see lower. Good thing is, NQ was so bullish to the point where it would still hit TP regardless of ES being the weaker asset, but I can promise you guys in chat, if ES was ever bullish at any point today after our entry, not only would this trade been a TP1 trade on NQ, but this trade would have hit multiple take profits at once. So that's pretty much that, and that's the review. Hopefully you guys enjoyed it. With that being said, I'm going to catch you guys in the next one. Peace out.